What happens when a truly unstoppable force crashes into an immovable object in the world of finance? Well, today, March 21st, 2026, we are watching that happen in real time. We're breaking down the ultimate paradox driving the gold market, a massive geopolitical shock colliding head-on with a huge policy shift from the Federal Reserve.
Okay, let's just jump right into the data because what we saw today indicates a brand new geopolitical reality. On March 21st, Iran launched a ballistic missile, and while the strike on the US-UK base at Diego Garcia failed, the real story here, the revelation, was the missile's range. It completely upends everything we thought we knew.
So yeah, this one event is the immediate catalyst for all the turbulence we're seeing. It's sending a massive geopolitical shockwave through the system, and it's literally rewriting the rulebook for global risk.
Then you have to understand, the situation has escalated at a truly breathtaking pace. It all started back on February 28th with Operation Epic Fury. Those were coordinated strikes by the US and Israel. Then, just a day later, March 1st, the Strait of Hormuz, which is a choke point for about 20% of the world's oil, was disrupted. And now, today, we're talking about a direct threat to a key strategic base, thousands of kilometers away.
Just look at this number, over 4,000 kilometers. I mean, let that sink in. That's more than double what anyone thought Iran was capable of. This isn't just a statistic, it's a complete game changer. It means that, all of a sudden, places like parts of Europe are potentially within reach. That completely redraws the global security map.
And it is precisely this kind of escalating uncertainty, this geopolitical instability, that is pouring fuel on the fire for the powerful, long-term structural bull case for gold.
And this number right here, this is the anchor for that entire bullish argument. JP Morgan has just revised their year-end price target for gold, all the way up to a staggering $6,300 an ounce. That signals a major revaluation is happening.
So you might be wondering, is JP Morgan just being a little too optimistic here? Well, not at all. As you can see, there's a really strong consensus building across Wall Street. Bank of America is targeting 6,000, Goldman Sachs is at 5,400. It really seems like everyone agrees on the direction gold is headed. The only real debate is how fast it's going to get there.
So what does this all actually mean? Well, analysts are saying this isn't just some temporary spike in the price. They're calling it a rebasing higher, which is really just a fancy way of saying gold's fundamental value is being completely reevaluated. We're talking about a permanent shift in how countries view gold as a safe haven asset. And this chart, wow. This chart illustrates that shift perfectly. I mean, look at this. For 3 years straight, central banks bought over 1,000 tons of gold each year. That's more than double their historical average. And even with prices at record highs, the forecast for this year is still a massive 800 tons. Why? Because nations are scrambling to diversify away from the US dollar.
All right, now before we get to the other side of this tug-of-war, just a quick but important reminder. This is all for informational purposes. We're here to break down the data for you, not to give out investment advice. Always do your own research.
Okay, so let's move to the other side of the equation, because there is a powerful headwind building against gold. And that counterforce is US monetary policy, specifically a very hawkish shift at the Federal Reserve.
The spark for this shift was the nomination of Kevin Warsh to be the next Fed chair back on January 30th. Now, Warsh is known for being tough on inflation, and the market's reaction was, well, let's just say it was swift and violent.
And here you can see what we're calling the Warsh effect in action. The market basically panicked, pricing in a future where the new Fed chair would raise interest rates aggressively to fight inflation. And that fear, it led to a massive sell-off. Gold plunged 11% in a single day, and silver crashed an incredible 37%.
And listen, this isn't just Wall Street chatter. The Fed itself is signaling a tougher stance. They've just raised their forecast for PCE inflation, which, is just their preferred way of measuring prices, up to 2.7%. With energy costs going up because of the conflict, it's just much less likely they'll be cutting interest rates anytime soon. So all of this sets up the central conflict that is defining the gold market today. It is a classic, textbook tug-of-war between two incredibly powerful and opposing forces.
So on one side, you have the bulls. They're looking at the unstoppable structural demand from central banks, the rising geopolitical risk. They see a flight to safety. But then you have the bears, and they are laser-focused on the Fed. A more aggressive Fed means a stronger dollar and higher real yields, and that makes holding gold, which doesn't pay any interest, a lot less attractive. So where does that leave us for the rest of 2026? Let's break down the key drivers, the critical factors that will decide which side wins this tug-of-war.
First, obviously, is the Fed's policy path and whether Kevin Warsh actually gets confirmed. Will they stick to their hawkish guns? Second, you have to watch the central banks. Will their buying continue at these really high prices? And third, of course, is the conflict itself. Any sign of escalation or de-escalation is going to have an immediate impact on the market.
And this all leads us to the fundamental question for any investor in this space. It's the multi-trillion-dollar question. Will this undeniable, multi-year trend of structural demand ultimately be strong enough to overpower the headwind from a hawkish Fed? Or has the explosive rally we've already seen priced in this paradigm shift? How this all plays out is going to shape the market for the rest of the year, that's for sure. If you want to stay on top of this story with more of these data-driven insights, you know what to do. Make sure you hit that subscribe button for Next Gen Invest Global, and if you found this explainer helpful, give it a like and share it so other people can get up to speed on what is happening. Thanks for watching.